What happens to your wealth when a decades-long Cold War suddenly ends overnight? While the mainstream media is busy screaming about regional conflict, a historic back-channel peace treaty between Washington and Tehran is quietly reaching a breaking point. But this isn't just about politics. It's about a massive, violent rerouting of global capital. Most retail investors are completely blind to what's coming next, leaving three critical questions that will define the next generation of wealth.
First, when millions of barrels of sanctioned Iranian crude oil suddenly flood the supply chain, which energy stocks will face an absolute meltdown? Second, which hidden shipping conglomerates on Wall Street are about to unlock unprecedented profit margins as maritime trade routes clear up? And third, when the fear premium leaves the room, how fast will institutional trillions exit gold and defensive safe havens?
Welcome back to the Finance Lab. Over the next 4 minutes, we're going to answer these exact questions, expose the hidden tickers, and show you how to position your portfolio before the ink dries on this treaty. Let's dive in. The immediate, most violent shockwave of a US-Iran breakthrough will hit the global energy grid, specifically crude oil. Iran, sitting on some of the largest proven oil reserves on the planet, has been completely choked off by international sanctions. The moment those diplomatic pens hit the paper, millions of barrels of low-cost Iranian crude will flood the global supply chain overnight. It is elementary market economics. An abrupt, massive spike in supply triggers an immediate drop in prices.
For sophisticated traders across North America and Europe, this presents a historic window for short selling or accumulating strategic put options on overvalued oil conglomerates. Make no mistake, billions of institutional dollars will aggressively rotate away from traditional high-cost energy caps, flowing directly into industrial manufacturing and retail transportation assets that thrive on cheap power.
As sanctions evaporate, the single most critical maritime chokepoint on Earth, the Strait of Hormuz, will transform from a high-risk war zone into a seamless, high-volume shipping highway. For years, international shipping conglomerates have been crushed by astronomical insurance premiums and dangerous detours just to move goods through this region. A peaceful resolution changes the entire math of global logistics overnight.
War risk insurance premiums will plummet vertically. This means maritime logistics, dry bulk carriers, and international freight giants will instantly experience a massive, unprecedented profit cycle. There are specific publicly traded companies on Wall Street and the London Stock Exchange that are the silent winners of this structural shift.
For the past several years, capital across the Western Hemisphere has been hiding in defensive assets. Fearing a sudden flare-up in the Middle East, massive institutional funds parked trillions into gold and ultra-safe government bonds, driving them to artificial highs. A signed peace treaty instantly eliminates that geopolitical premium from the market.
The moment that fear premium leaves the room, smart money will rapidly exit stagnant, low-yielding safe havens. It will aggressively rotate into high-growth emerging market indices and beaten-down tech equities.
The global markets do not reward those who are the most highly educated. They reward those who can accurately predict massive macro shifts long before they hit the evening news networks. For the past several years, capital across the Western Hemisphere has been hiding in defensive assets. Fearing a sudden flare-up in the Middle East, massive institutional funds parked trillions into gold and ultra-safe government bonds, driving them to artificial highs. A signed peace treaty instantly eliminates that geopolitical premium from the market. Our complete risk assessment models, asset tickers, and deep data links are fully detailed in the description below. Make sure to subscribe to the Finance Lab for more macro breakdowns. Position yourself wisely. We will see you next time.